If you are new to investment, you probably haven't heard that much about the Standard & Poor's 500, commonly known as the S&P 500. What is it? Well, you'll know more about it in this video, and be sure to take notes on the important points, as the S&P 500 is deemed to be the perfect way for you to learn more about investment. Welcome to Nova Society, the world's best finance channel for personal finance. Please give us a thumbs up, click the subscribe button, and turn on the notification bell. S&P 500 is a prominent stock market index that evaluates the performance of 500 of the largest publicly traded companies in the United States. It holds significant global recognition and is widely tracked, serving as a key reference point for assessing the overall performance of the U.S. stock market. The S&P 500 stands out as the top choice for long-term portfolio growth due to its significance as the leading benchmark for the U.S. stock market. Comprising 500 of the largest publicly traded companies, this index has garnered favor among both seasoned and novice investors for various compelling reasons. Its potential as an investment option is truly remarkable, primarily owing to its track record of historical performance, diversification advantages, resilience during economic fluctuations, and promising long-term growth potential. The S&P 500 stands out due to its meticulous and rigorous approach to selecting companies for inclusion in the index. The criteria are thoughtfully designed to ensure that the index represents the most influential and significant companies in the U.S. market. Factors such as market capitalization, liquidity, sector representation, and financial stability are carefully considered during the screening process. This attention to detail makes the S&P 500 particularly attractive to passive investors, who can rely on the expertise of the index committee in making these important decisions. Over the years since its inception, the S&P 500 has consistently displayed impressive performance, weathering economic challenges and reaching new all-time highs. With an average annual return of approximately 10%, it has provided investors with healthy and sustained profits over the long term, outpacing inflation and surpassing the returns of many traditional investment options. Advantages of investing in S&P 500. Investing in the S&P 500 offers numerous advantages that have historically made it an appealing choice for investors. The S&P 500 is a stock market index comprising the 500 largest publicly traded companies in the United States, providing broad exposure to the overall U.S. stock market. Some key advantages of investing in the S&P 500 include diversification across various sectors, which helps spread risk and reduce the impact of individual company performance on your investment. The index has a history of delivering strong long-term returns, outperforming many other asset classes, making it a reliable option for growth-oriented investors. Additionally, it offers simplicity and accessibility, with many investment vehicles like mutual funds, ETFs, and index funds tracking its performance, allowing individual investors to participate easily. Another advantage is the lower costs associated with passive investment vehicles that track the S&P 500, which translates to more of your investment returns staying with you. The U.S. economy's long-term growth potential provides opportunities for the underlying companies in the index to increase earnings and shareholder value over time. Moreover, the S&P 500 serves as a benchmark for overall U.S. stock market performance, enabling investors to compare their portfolio returns against a widely recognized standard. The index's liquidity is another benefit, given the large, established companies with high trading volumes within the S&P 500, making it easy to buy and sell shares without significantly affecting market prices. However, it's crucial to consider that all investments carry some level of risk, and past performance does not guarantee future results. Market fluctuations and economic conditions can impact the S&P 500's short-term performance. Before investing in the S&P 500 or any other asset, individuals should assess their financial goals, risk tolerance, and time horizon. Diversifying their investment portfolio across various asset classes can help manage risk and potentially increase returns. Consulting with a financial advisor can also be advantageous in creating a well-balanced and suitable investment strategy tailored to one's specific needs. Risks of investing in S&P 500. Investing in the S&P 500, one of the most popular stock market indexes, provides several advantages, but investors need to be aware of the potential risks that come with it. Market risk is a significant concern, as the index's performance is subject to various factors, including economic conditions, geopolitical events, interest rates, and investor sentiment, leading to significant short-term fluctuations. Moreover, despite the index's diversity, it remains concentrated in certain sectors, making it susceptible to downturns in specific industries or individual companies, exposing investors to individual company risk. Attempting to time the market is challenging and risky, and investors may miss out on potential gains or become vulnerable to market downturns, leading to market timing risk. The performance of the S&P 500 is closely tied to the health of the U.S. economy, making it vulnerable to negative economic events, which can cause a decline in stock prices and index value, representing an economic risk. For international investors, fluctuations in exchange rates can impact the returns on their S&P 500 investments, adding currency risk to consider. Additionally, changes in regulations, tax policies, or political instability can influence the business environment and companies within the index, leading to regulatory and political risk. While stocks may act as a hedge against inflation in the long run, high inflation can still affect the economy and individual companies in the short term, contributing to inflation risk. Emotional decision-making can be detrimental to investors, as behavioral biases may lead them to buy at market peaks and sell at lows, rather than adopting a disciplined long-term strategy, resulting in behavioral biases risk. Finally, unforeseen disruptive events, like black swan events, can cause substantial market volatility and have an impact on the performance of the S&P 500, adding another layer of uncertainty to investors' decisions. To manage these risks effectively, investors should diversify their investment portfolios across various assets to reduce exposure to individual company risk and adopt a long-term approach to weather market fluctuations and increase potential returns. Seeking professional financial advice and staying informed about market conditions can also be invaluable in making well-informed investment decisions and helping investors navigate the complexities of the financial markets and achieve their long-term financial goals. Investing in the S&P 500 requires a patient and long-term approach, as the yearly returns may vary, and there might be periods of negative performance. However, the true potential of the S&P 500 lies in the magic of compound interest, which becomes a powerful driver for exponential growth and significant wealth accumulation over time. Despite occasional fluctuations, the S&P 500's strength lies in its diversification across various sectors and industries. By owning shares of multiple successful and reputable U.S. corporations, investors are shielded from the excessive risks associated with individual companies. This broad exposure ensures a well-rounded and resilient investment approach, allowing investors to participate in the collective strength of the American economy and enjoy the benefits of long-term growth. Highly respected investors like Warren Buffett have consistently expressed their positive views on the S&P 500, emphasizing its long-term advantages and their unwavering confidence in the enduring growth potential of the U.S. economy. S&P 500 ETFs provide an appealing and cost-effective way for investors to access the index's performance, making it accessible to a wide range of individuals. One significant benefit for S&P 500 investors is the regular dividend payments they receive, offering a stable source of passive income even during periods of market turbulence. Investing in the S&P 500 paves a clear path toward long-term wealth generation and financial freedom. Its remarkable historical performance, diversification benefits, and resilience in the face of economic challenges establish it as a steadfast symbol of opportunity and prosperity. As the economic landscape evolves, the S&P 500 continues to guide investors toward a brighter and more secure financial future. Before investing, it is highly recommended to learn about the S&P 500. By gaining insights into the index's companies, sectors, and overall market trends, you can assess potential risks and rewards, align your strategy with financial goals, and determine your risk tolerance. Everything in this world comes with its advantages and its risk, but one must be wise enough to understand that the stock market can be hard to master. If you want to learn more about personal finance and generational wealth building strategies, visit our channel and subscribe for more enlightening videos to increase your wealth.